Yo guys, welcome back with me Kenwilboy FX, and in this video I'm going to discuss about my simple trading strategy that had turned me from broke to millionaire. Alright, watch this video till the end and don't skip any of its part. Alright, let's dive straight into it. So this trading strategy, I would say amazing, and I also want to show you the result of using this strategy, my trading portfolio or my trade history. As you can see here, this is my last 30-day trading portfolio in one of my trading account. I have lots of account, and this is just one of my account. As you can see, on the last 365 days or on the last 1 year, my profit is 57,200 USD. But this account hasn't been 1 year. This account probably is only up for 6 months. This is not 1 year. This is actually like about 6 months. And I had already profited 57,200. As you can see on the top left, my equity or my balance is 57,300 and something. My profit on the bottom right is 57,200 something. The difference between my balance and my profit is $100. Means the capital is 100. I've turned $100 into $57,000 in about 6 months. Although it says 365, but this account had not been created for that long. It's only been like 6 months or something. All right. So what you can see here, I'm actually a real trader with actual portfolio and trade history. Most of the trading gurus, trading mentors out there on YouTube or on the internet, on social media, most of them don't have real portfolio. This is actually a real account. As you can see, a lot of people don't have portfolio, but I do have. So I can confirm that what I'm going to tell you is actually the real deal, a good advice. Not only portfolio, I also have a certification. I'm a certified technical analyst from Indonesia. It's official from the government. So the government trusts me to teach technical analysis. Other gurus, other mentors, I don't think so. So if you're looking for trading mentor, you're beginners looking how to start trading, I'm your best bet. Maybe this video is your best choice. All right, let's just dive straight into it. So you might ask,
so which strategy do you use?
My strategy? We need to switch to another app called TradingView. This app is only for analysis. This app, you couldn't execute any orders because this app is built just for analyzing the market. So my strategy is to use two indicators called Kenwilboy Alert Ribbon and Kenwilboy Alert Signals. How do you use it? The way I use it is fairly simple. So when the ribbon turns green and there is buy signal, means you may enter a buy position because the market might go up, and vice versa. If the ribbon turns red and there is sell signals, means you may enter a sell position. You may enter a sell position because the market might go down. That's the simple philosophy behind this strategy. As you can see here, the strategy doesn't always work. Sometimes there's buy signals, the ribbon turns green, the market only goes up a little bit and then goes down again, and we will lose a trade over there. So how do you compensate that? So our losing trades or our misanalysis, our wrong analysis becomes a profitable trading setup. We need to apply another technique called, this is what I do. I apply another technique called layering. Layering, this technique, not a lot of mentors or guru are teaching about this. So the way how this layering technique works is, let's say, for example, you open a buy position here, and suddenly the market, instead of going up, the market goes down. So what do you do with layering technique? If you believe that the market's gonna go back up, right back up, you enter a buy position, double the amount of the last position, or at least bigger than the last position. And if the market still goes down, you enter the market again, buy again, even bigger size, double, twice the amount of the previous size. Why? Why did you do that? What's for? So the purpose of this strategy is to increase your win rate. If you apply this technique correctly, you can get like almost 99% accuracy, 99% win rate. The way this strategy works is by buying bigger lots, and bigger lots, bigger positions. When the market goes up, or maybe according to your analysis, just a little bit, all of your losses from the previous position are covered or hit break even by your last entry, because your last entry is the largest of all your entry in that particular setup. So you understand? Let's see another example. This is sell position. So the way this market works, or the way this technique works is, let's see, for example, you're selling, then suddenly the market goes up, you sell again, bigger lots. Up again, you sell again, bigger lots. And when the market goes down, the market only needs to go down very little or several points, very short, and all of your losses from the previous position are covered. Let's just see at the diagram here. See, the gross profit 80, the net profit 10. But the market only goes down a little bit. The market doesn't need to go down to the first entry or the first position. So that's layering. But some of you might ask,
but this technique is very dangerous, very risky, high risk.
Yes, I would say, yes. High risk, high return. So how do we minimize the risk? How do we decrease the risk? How do you do that? How do you manage the risk? The way I do it is by paying attention to these two things. Number one, you need to manage your money management. What is that? Money management means limiting your lot sizes. Do not open positions that are too big, or do not open with a huge lots. No. What I mean by maintain your money management is by maintaining your lot sizes. My recommendation is for every $100 in your trading account, you open 0.01 lots per position, just for starting. Why? Because you need to start small, especially if you use the layering technique. Your lot size will go big very, very quickly, because exponential times 2, the curve like that. So if you have $200 in your trading account, you may open 0.02 lot. If you want to open 0.1, means you need to have $1,000 in your trading account. That's what I mean by money management. Limiting, or put a limit on your lot sizes. Number two, use stop losses. I've been telling this again and again and again, over and over. Most people, they don't trade with stop losses. What is it for, stop losses? Stop losses is to prevent your account from being blown away. Hit margin call, your account goes to zero. That's what I mean. With stop losses, margin call, it's basically impossible, or blowing your account is impossible, because before you blow away your account, your stop losses are hit and it automatically cut your losses. Stop losses is like your safety nets. When you're swimming, you use life jacket. Nah, that's the same concept. Stop losses is your life jacket. All right. If you want to learn more about Forex trading, if you want to learn deeper, because the knowledge goes beyond this video. If you want to learn more, the best trading school or the best academy is right down below on the link below. Kenwilboy FX. Complete education from zero to hero, from basic to advanced, only for $4. Not only education, but you can also get trading signals from professional analysts, our team, KFX team. You can also get custom indicators, the one I've shown you before. You can also get trading fee discount on several regulated brokers, the good one, a lifetime discount, so it's cheaper for you to trade. lower spreads, lower commission, or even zero commission. And also you can get one of the best trading groups and communities with the most active members and the largest trading groups. So what are you waiting? It's on promo now from $100 to $4. So if it's not on promo, it's expensive, $100. It's not that expensive, I know, but it's gonna cost you more. But now, only for $4, you can get all of that. So get it before the promo ends. Don't forget to like, subscribe, and hit the bell icon. Thank you for watching, and peace out.